This is Eric Mother, mother.com. As we see markets here, late February into early March 2021, we're starting to see signs of a market that is trading with a little bit of a hint that it has an appetite for lower prices. So if the market is to go down, we don't know, but if it is to go down, I would say be on the lookout for stocks that might do the following. In other words, they might be giving you a sell signal, a red flag, if the following two things happen. So let me set the stage. So let's say we have an instrument that had a nice run, settled down for a couple weeks, couple months, tried to break out and fails. So tries to clear the previous weekly or monthly closing highs and fails. This failed breakout is number one of your possible red flag. The second red flag, and probably the most important one, is if it breaches, if it drops below the weekly or monthly or daily, depending on what time frame you're using, if it cracks below the base. So we can say this is the sideways base. It had built, tried to break, but failed with this movement back below. So that's a failed breakout. And what I'm saying here, so number two is the break below the base formation. And again, this is the base formation right here. So that break in itself is a sell signal. This movement here is a sell signal. Now I call this the two bearish wrongs. I call this method again the two bearish wrongs. Subscribers to my paid website can find this under the education link. It's a very simple concept. Oh, by the way, this is a playlist. And if I have some free examples, I should link those in the description of this very video. So here's a good example. We have a weekly closing high. This is a Nike. There's a breakout attempt here that fails, which your first red flag, and then notice it goes on to fail, drops below this sideways base. It is that break that is a sell signal. You want to be careful not to be caught when this break happens. The risk is very high for this type of a move if you're not willing to play the wait game for later movement higher. In other words, this instrument would have gone lower. Who knows? So really, the best time to get out is there. So we can say in the here and now, a couple of things to observe. Number one, there's this weekly closing high at about 145. For a couple of weeks, those breakout attempts, that's your first red flag. Number one. Now, number two would come if it breaks this range here at about 133, whatever the weekly closing low is. If it breaks below that range, be on the lookout for a potential aggressive move to the downside. In other words, if you own the instrument and don't want to be part of a sell-off, this is the last line of defense, because that would constitute the second red flag. And as a quick side note, notice this breakout here came with weak RSI, as the RSI was not confirming strength. The most recent breakout here can also be seen to confirm with RSI not looking too strong. But back to the concept, the method, watch this recent weekly closing low. A violation of that low could open the gates for much lower price movement. This is Eric Moore with Mother.com. Love, light, light, love. Namaste.